so we have the same wave analysis. Now we are quite sure that the correction after doing wave 5 is finished. After doing wave 3, I'm sorry. So that wave 3 here finished, then 4A, 4B, and finally a 4C down there. Alright, there has been a 1-2 in yellow. Now there's a breakout into high internal degree or high degree 1, 2. We expect there's going to be we expect there's going to be an extension into 3, 4, and 5 all the way to that neckline at high degree 3 or high degree 5 in that yellow 3. This is one option. The other option, the market takes off right away very strongly again to the neckline 165, and of course these levels, very high levels. This is on the premise that this is really what we are seeing on the daily chart. We remember that we had broken out of that cycle earlier, that lower cycle, and the market just went off on the tier. We're inside of this ending diagonal on the daily and weekly charts. We've seen them lots of times. There's a vice here. There's a very strong vice, and this means we're going to contest again upper boundary of that ending diagonal because of the positive momentum plots on all time frames again. We're going to be seeing 165.17. We have 165.46 breakout high for the week. For the months, I'm sorry, we are doing an ending diagonal that will probably reverse at the top of that macro ending diagonal in a head and shoulder formation. Can take you all the way to 169, 168.77. There is an ending diagonal really here. Alright, so now going forward, you just need to buy the market or as close to the market as possible. Earlier, we're going to buying market takes us to something like 162.17. 162, maybe even a bit lower, 161.95 and 161.9. You just need to stop at 160.12. That's all. Below the tweezer. That's it. Alright, this stop here showing on that daily chart shows here on the pivot levels at 160, and on our minute trade management chart is right there, 160.5 actually. This is now of course more fine-tuned and is more correct. You don't really have to have it at 160, you just have to have it at 160.5. Level 2, that's all. Anything that you buy above level 2 should be taking us again to 165.46 towards the end of the month, maybe 168 if actually yields break out with US dollar. It's probably going to be sterling. Bank of England is going to be pressured to raise short-term interest rates, and therefore this will do 160. The momentum points to this. So the entry should be today. Without, we're going to be seeing these levels, 161 point. If you're not already long, we're long, I believe, as of day before yesterday. So we hold that to 165. We're looking here at the possibility of seeing 161.60 and 161.50. Both of these issues, sterling yen and dollar yen, are actually cycle 3 issues. Cycle 3 trends mean that on the 15-minute chart every day you can get to buy the pivot level on the 15-minute chart, take profit at R1 level. This is what we're seeing today on that 15-minute chart for sterling yen, and we expect that the market has already bounced above the pivot level. We're seeing inverted head and shoulders. Even if we break that upper boundary, remember we said we were going to buy 162.10, this is 162.18. Any retraction just takes you to 161.90, and it's just a right shoulder to buy into, and the market progresses higher.